Good afternoon, everyone, and welcome. Thank you for joining us today for today's Capital Readiness Resource Series, Powering Business Growth Through Commercial Capital. My name is Tanya Poindexter, and I serve as the Chief Operating Officer of Virginia Minority Chambers, and I'm really glad you're here with us today. At Virginia Minority Chambers, our mission is to strengthen and support minority-owned and underserved businesses by increasing access to resources, capital, and opportunities that support business growth. Access to capital is one of the biggest barriers businesses face, and this series is designed to help close that gap by providing practical, real-world guidance. A few quick notes before we get started. Please use the Q&A feature to submit your questions as we go, and we'll pause later to address them, and feel free to use the reaction button to respond to information you hear. You'll also receive a short survey at the end of the session, and we'd really appreciate your feedback to help us continue to improve this series. And now it's that time. I'm really excited to introduce our featured presenter. We're joined today by Rob Caro from Industrial Bank. Rob is a vice president and commercial loan officer with over 20 years of experience in business and commercial lending, including commercial real estate, SBA, 7A, and 504 loans, startups, working capital, and franchise financing. That's a mouthful. He's a graduate of University of Maryland, College Park, Robert E. Smith School of Business, and is actively involved in the DMV business community through workshops, panels with organizations like the National Urban League and Prince George's County Economic Development Council. Rob brings both deep expertise and a real understanding of what business owners face with seeking capital, and we're so grateful he chose to spend today with us. Rob, thank you for joining us, and now I will turn it over to you.
Excellent. And Tanya, thank you for having me. It's a pleasure to be here for the Virginia Minority Chamber and presenting this to the group that's attending. I look forward to engaging with you guys. Please don't hesitate to ask questions, as Tanya shared. And we're going to go over the commercial lending process. And I think you'll get some insight as to what we as bankers look for when you're going to a bank or inquiring about getting a commercial loan. I hope you find this information informative. My contact information will be shared with the group, and so we'll be able to communicate afterwards if you do have any questions that maybe I don't answer during this process. With that being said, I'll go ahead and get started. Again, my name is Rob Carroll, and I'm with Industrial Bank. And Industrial Bank has been around for over 90 years. A lot of people don't know that, in the DC community, serving the community, whether it's standard bank deposits, commercial lending, mortgages, et cetera. We've done it all, and we've done it for, as I said, over 90 years. So that's very important. With that being said, I did want to see, and Tanya, you can help me with this, the attendees. We have 7 participants from what I can tell.
Yes.
Okay, excellent. And please, if you have any questions, ask the questions in the Q&A. I wanted to. Okay. And just if you can answer in the Q&A, is the people that are attending the meeting right now, are you starting a business? Let me know in the Q&A, or you can raise your hand. Or have you already have a business in place? What is your current standing? Are you just inquiring, curious about starting a business? Where do you guys stand right now? Let's see, one person.
So they We had one person say they have a business and are working on a business.
Okay, that's Mr. Wiggins. Okay, Ken Wiggins.
Mhm.
Okay, excellent, excellent. All right, I see that. Okay, I think you will find this informative in, as you're going through your process of evaluating the business to start, or if you have a business and you're looking for commercial financing. I think you will find this very informative. So let me go ahead and get started for the attendees, and there may be a few more people that join. But in the lending process, and I'll share my screen so you guys can see what's going on. You want to enable the screen sharing, Tony?
Okay.
Okay, thank you. And let me confirm for me that you can see the screen.
We can see it. Hmm.
Okay, excellent. In the lending process, you will see, and we will cover the overall lending process, types of commercial loans, loan requests and decisioning process. Overall, we're going to talk about credit analysis, discuss financial statements, really get into what we as bankers look for in the internal decision process, and a brief mention on the application submission itself. And again, don't hesitate to ask questions as we go through this process. Okay. One of the reasons that we generally give for people that come to us and are looking for business loans, probably the most common reason is working capital for receivables, especially in this area where you have a lot of government contractors in place, and they're billing the government, and their need to receive those funds, obviously to meet operation overhead. So we get a lot of requests for lines of credit to handle some of the slow receivables that they receive in their payment, and other contractors and other businesses also. Capital expenditure is another one that we give frequently for people buying equipment or capex to buy property, etc. Cash flow timing is important because obviously, funds that are coming in and funds that are going out, maybe they're short and they need sort of a line of credit to help you with your cash flow. Commercial property, real estate purchases, whether it's owner occupied. Sometimes we have investors that want to buy non-owner occupied property. And startup financing. We get a lot of requests for startup financing. Individuals that want to, start a business and they want to talk to us. They're looking at, they hear about the SBA will help you with starting a business, and they come to us looking for SBA loans and non-SBA loans to start a business. So we have that discussion quite a bit with our potential borrowers, and that comes up frequently. Now, the type of loans that we do, commercial real estate loans are very common in this area. People want to buy an office condo or to an office building, to a separate standalone place for retail or a retail location. Working capital, as I mentioned, generally in a form of a line of credit for our borrowers because they want to be able to, you know, uh, use those funds to meet overhead or to meet, as I said, slow receivables. We get requests from individuals that want to purchase a business. So we do that kind of financing. If you have, or we get someone who is a partner in the business and they want to buy out the partner, or the partner wants to leave the business. So we do business purchase type financing. Franchises, we've done several franchise type financing in the last year. Equipment purchase, medical doctors, medical facilities want to buy some very expensive equipment like MRI machines, et cetera. We finance those. Partnership buyouts, as I mentioned. SBA lending, which is very important. SBA, you have the 7A program, the principal program, or the 7A program, and the 504 program. The 7A is usually done for startups or businesses that need not just to purchase the business or start the business, but they need working capital for things like marketing, payroll, et cetera. That's all done through the 7A program. Then we have the 504 program, which is usually used for real estate. It can be used for very expensive machinery, but we see it mostly for real estate purchases. So individuals, and the reason some people may do a 504 over what we call conventional non-SBA real estate financing is because the SBA for both the 7A and the 504 is only 10% down for you to be able to take advantage of that loan. You only have to put down 10%, where non-SBA conventional, you're looking at 25% down. And then there's rate structures and other things and terms that can be advantageous. But the main reason most people choose it is because of the lower down payment, lower out of pocket money that they have to come up with. Also, we do lending for build out of space. If you're renting or leasing, do quite a bit of these for people that need to build out of space, whether it's to be a retail location, a restaurant, a medical office. You're leasing, you're working with the landlord, and the landlord, you're negotiating what's called a tenant improvement allowance, which is what the landlord will give you if you incentive for you to move into the space, the capital they'll help you with to build out the space. But we do a lot of financing in that area. Okay. So specific to the loan request, before I continue, any questions on the parts that I've covered so far? Okay, I'll take that as I'll continue. On the loan request, the specific amount, we do anything from, 50,000 up to several $1 million, even, multi-million dollar participation programs also. But we usually start at 50 for startups and go up from there. And the use of proceeds can be a variety of things, as I mentioned before: working capital, real estate purchase, build out. It just varies. The repayment terms depend on the type of loan. If it's a non-real estate associated loan, that's usually going to be 5 to 10 years. If it's a real estate associated loan, that term will go out 20, 25 years. Different maturities and amortizations associated with that loan. So a loan may have a maturity of 10 years, and we might have a 5-year adjustment. So we call it a 510. A loan may go out to 20-year amortization, but a 10-year review. So we call it 1020. So, but it just depends. Is it real estate based or non-real estate based? Will determine how long the loan is, what the term of the loan is. Then on loans, we also have conditions and covenants. A covenant can be you have to provide quarterly financials for your business, depending on the business. Maybe every 6 months, it may just be annually. If you're doing accounts receivables and you're trying to get a line of credit with accounts receivable, we will ask you to provide your accounts receivable aging schedule with your request for that particular draw on the line of credit, and it may be also requested quarterly. So there's various conditions and covenants. Collateral is also requested for many of our loans, not all, but most. And collateral is usually real estate, equipment, sometimes inventory, but they usually fall into real estate and equipment. Personal guarantees, sometimes this comes up. Some people don't like to give personal guarantees, but most banks are going to ask you for personal guarantee, where you're guaranteed that the loan will be paid in full. If the loan is not paid in full, you're understanding that the bank may come after personal assets, but you are providing a personal guarantee. And that's, especially when you're starting out, 100% of the time, the bank is going to ask you for personal guarantee. Non-personal guarantee loans are called non-recourse loans, but you rarely come across that, and they're rarely done in this day and age. As we go further into the decisioning process, we look at what you might have heard, the 6 C's of credit, which are cash flow. Again, cash flow being the inflow of funds and the outflow of funds. Obviously, you want to have the inflow of funds be higher than the outflow of funds, the revenues and the sales that you're generating, and profitability. And this is really kind of the pillar for commercial bank underwriting. We base our lending on cash flow, what we call a debt service coverage ratio. So we're not an assets lender. So we're not. You may request a loan for $1 million, and you have a $5 million piece of real estate that you're pledging as collateral. And sometimes we'll hear, well, I have the $5 million. Why can't you give more than covers the 1 million? But we're not real estate lenders. We're not looking to take real estate. We're a cash flow lender. So we're looking, can you viably pay monthly with your business and your current debts, personal and business, current obligations, and the proposed debt. Can you comfortably pay within a certain ratio that monthly payment of that loan? And if you can do that, you have a good chance of getting approved. And it's not just based on the real estate, even though that's the second one. Collateral is important. Obviously, we need most of the times for larger loans, say anything over 100,000, we're gonna be asking for collateral, and in some cases under 100,000. Cash equity injection is what you put into the project, into the loan. If you're starting a business or if you're doing an SBA loan or you're purchasing a property, let's say it's SBA, you got to put in 10%. If it's not SBA, you put in 20, 25%. And then we're also looking at what is your liquidity in your overall liquidity of what you're requesting or your current business beyond the down payment or the equity injection. We want to make sure that you've put everything and you have no funds left for anything if something goes wrong in this early on in the process. Character is about, obviously the individual, and this is where we look at your credit history to see if you have made payments on time, and if you haven't, what are the reasons for that? Because we don't necessarily, we look at them, we take a more holistic view. So that even though we look at your credit score, the credit score is not the end all and be all, but it has to be, somewhat reasonable. Capacity is your ability to repay the loan kind of ties into cash flow, and you're being able to make sure you can make those payments based on your existing obligations. And then when you come for a loan, what is the condition of the market right now? What is going on in your industry? What is going on in the economy? What is going on with government regulations? Does this make sense? Does this business make sense, or does this request for financing make sense given the current environment? An easy one is COVID. Shut down a lot of restaurants. So when we were getting requests for restaurants, we did have to talk to borrowers and say, right now, this is not the right time. And some of those borrowers had since come back, and we've done that financing overall. So that's kind of the 6 C's of credit. Purpose. What is the purpose of the business? We get right now a lot of cannabis requests. Unfortunately, it's not a federal. It hasn't passed federally, so we can't do cannabis, even though it's being looked at in DC and other areas. So that's probably coming down the line for dispensary and things of that sort. Is it within our policy guidelines? Can we do it? Does it fit policy? Like, for example, we don't do car dealership because it's not in our policy. It requires a certain, what we call floor planning. And then the structure. What is the structure of your business? Are you an LLC? Is it a partnership? Is it a C corporation? Is it an S corp, pass through? Those kind of things we look at in terms of how we put together the deal, how long we put it, how long it's for, what is the maturity. I see a question. And the question is, what is the biggest mistake you see business owner make when they're applying for financing? And the biggest mistake that business owners make are a couple of things. Number one is collateral. The need for collateral is important. And then for people who are starting out, this is more for people that are starting out, their financial documentation is not up to par that it needs to be, particularly when it comes to projections. A lot of times we see projections in business plans that are just too exaggerated like we have industry numbers. So we know the restaurant industry, the medical industry, the various fields, government contracting, and so forth. We have numbers in the industry. We have an idea of what is reasonable and what is not exaggerated. Sometimes business owners exaggerate their business plan in order to impress the bank to get financing. And outside of that is making sure that you're maintaining very solid credit is very important when you come to apply for a loan, even though we're more flexible than other institutions when it comes to credit. So keep those in mind. What credit score do we recommend? It's another question by Miss Broadway. What credit score do you recommend? And the minimum score. This is a good question because it varies by institutions. I can tell you kind of the generic answer to this question is that 700 or better is the score you want to shoot for if you're going to go apply for a loan. For us, we work under 700 and we don't tie strictly to the credit, but you can't come to us, let's say, with a 500 and something credit score. That's just not going to work. But if you're in the sixes, mid sixes, or something like that, it's something we can consider, in the overall look at review of the package. So, but the standard answer would be if you ask throughout the banking industry, they want you to be a 700. But we're, as a small community bank, we're a little more flexible, more holistic in our approach and how we look at things. So keep that in mind. Let me go. Okay, as we look further into credit analysis, we talked about what line of business are you in, what kind of products and what kind of service. We review that. What is the ownership makeup? This is important. What is the management experience? Ownership makeup, let me step back on that a little bit. Most banks, if you're 20, anyone that's 20% or more owner needs to be on the loan request. So if somebody, if there's three partners, all three need to be on because that's a third each, 33%. They need to be on the loan request. If someone owns, 55%, the other party owns 45%, all parties need to be on the loan request. Now, if somebody owns, let's say it's three partners, two of them own 90%, a third person doesn't, the 10% owner does not need to be on the loan request. So keep that in mind. Experience is important, particularly if you're doing a startup financing or if you're going for going for SBA lending. Experience is they're going to review the SBA reviews that. We review it also because we want to make sure that you understand what you're stepping into, how to run that kind of operation. And it comes in multiple times I've seen where inexperienced borrowers who want to start up a business do not fully understand the business side that you're stepping into. You know your product, you know your service, you may know how to market it, but the business side that you're stepping into, particularly, let's say, for example, you need to lease a space for your new retail location, your new restaurant, your new facility for whatever business. A lot of times you get, there's confusion in terms of negotiating a lease with the landlord, negotiating what's called tenant improvement allowance, which is what the landlord provides you as part of the incentive to lease the space. A lot of borrowers get hung up. They have no idea how difficult the permit process can be, DC, Maryland, and Virginia. It can be very difficult, very challenging, and very time consuming. So, and many times they've signed a lease where they end up having to pay monthly lease payments and they haven't even opened up the business or occupied the space yet because the permitting process has taken so long. So they didn't time it correctly. So it's very important. This has jammed up a lot of borrowers. And they get off, they start the business and they're already in the hole because they've been they've been making lease payments and the business hadn't even opened yet. You still have to get your permit, you still have to get your certificate of occupancy, et cetera. So it's very important that you have experience on those areas or you have someone who's guiding you through that process. So keep that in mind. Track record, again, time in business. If you are an existing business, if you're not an existing business and you're starting a business, let's say it's SBA, we want to see what kind of background you have in that particular type of business. Did you work in that business or are you bringing a management team or a manager that's experienced in that business? Obviously, if everyone has successes and failures, if it's a business that's been around a while, you've gone through different economic cycles, whether it's the real estate meltdown, COVID, et cetera. So we look at that. How have you handled that? Your customers, are you concentrated on one customer? And let me stop there. We have a lot of government contractors in the marketplace. A lot of government contractors are concentrated, especially the smaller ones, are concentrated on one contract or two contracts. And that's can be challenging to review and approve because if you lose that one contract, you lost your source of revenue. So banks do not like concentration. We want you to be diversified across multiple contracts or across multiple customers, commercial customers, and not just, where 70% of your revenue is coming from one or two clients. And if you lose them, your business really gets hurt. So you got to be aware of that, as you're reviewing and looking to obtain financing. Competition, we look at industry conditions. We talked about what is the current environment in the marketplace. What documents, that's another question, what documents do lenders usually want to see when you apply for a commercial loan? Excellent question. I'm actually going to cover that right here. It was kind of the next thing I was going to cover. Documentation, very important. This is probably why many of you are here. As you are putting together your documents, are you a startup or are you an existing business? When we say existing, we're looking for someone who's been in business at least 2 years and you filed federal tax returns, business tax returns, whether it's a separate return or Schedule C, you filed at least 2 years worth of returns. That's existing for us. Sometimes we get clients who've had a business, but they never really filed any returns. They really haven't worked on it, and they're just starting, even though they've had it for 5 years. That is still a startup for us. Then, if you are a startup, a couple of things. First things first, you need a business plan. You need a business plan with 3 years worth of projections in them. We prefer to have some kind of obviously a deep analysis into the competition, the marketplace, why this is a good opportunity. Resume of the borrower should be in that business plan, but in projections for 3 years, with the first year broken out monthly for the first 12 months. You don't have to do that for year 2 or year 3, but the first year needs to be broken out monthly. Revenue, sales, expenses. It could be utilities, trash, marketing, payroll, benefits, insurance. All those needs to be broken out. And we want to see that you're accounting for all those expenses in your projections. So that's important. Then your business tax returns usually is going to be 3 years worth of returns for business, 3 years of personal. So right now we're in February of 2025, 26, I mean, sorry. So we would ask for your 24, 23, 22 if you've been in business that long. If you haven't, that's fine. We'll take what you have. And then we would ask, most businesses have not done their 2025 returns yet. Most businesses file for extension to later in the year. So we would ask for year-end 2025 profit and loss statement and balance sheet along with those tax returns. So keep that in mind. Now, if we were in May, we would ask, and assuming you had done your returns, and if you haven't done your returns, we ask for an extension letter. But assuming you have done your return by May, we'll ask for 24, 23, and 25 returns, and then what's called your interim statements for the year of 2026. So we will ask for profit and loss and balance sheet through April of 26. So in many of our clients, this is easy. They have QuickBooks. They'll just print them right off QuickBooks and give us their balance sheet and their P&L statement. Some clients have bookkeepers, and their bookkeeper would do it, or they'll get it from their accountant. And then there are some clients who just don't do P&Ls and balance sheet. They haven't really paid attention to that. They just do their annual returns, and we can take the returns, but we'll need that P&L and balance sheet. So please, again, this is something that sometimes business owners aren't prepared for. Have your interims up to date when you come to an institution, because it's going to be asked in the process. Personal tax returns, last 3 years. Personal financial statement is your asset and your liability sheet. Basically, your listing is a 2-pager listing all your assets, what you own, your home, your car, your bank accounts, investments, 401k, everything, all your assets, and then your liabilities, what you owe, card payments, house payment, credit card, and you get a net worth on that document. So that's your personal financial statement. Interims we talked about. We ask for 2 or 3 months worth of bank statements for the company or the individual. Operating agreement, bylaws that you would have drawn when you formed your company. Debt schedule is the debt that your company currently has. You may have a loan elsewhere. You may have a business loan, car loan under the business name. It's the business debt schedule. Business plan we've talked about. In addition to that, you need your tax ID letter and that's not listed here, from the IRS. You need your articles of incorporation, and you need your good standing certificate. Another one that jams people up. They don't pay the good standing annual fee, whether it's DC or Maryland or Virginia, and they end up, it comes up inactive, forfeited, etc. And we make, that's something that's required. It has to be in good standing for us to move forward, or any financial institute to move forward with the loan. A good standing certificate is needed. One question from Mr. Wiggins. Is a profit and loss report necessary for 2 years with the 3 years of business returns? Yes, the P&L is always necessary Not if we don't ask for P&L necessarily if you have let's say you had the tax returns through 25. We're not asking you for a P&L for 25. But it's later in the year, like the example I gave. If it's May, we need the P&L year to date 2026 and balance sheet, but not for the prior year if you're giving us prior year tax returns. Sometimes if it's a larger loan, a few million, 1 million, we may ask for P&L along with the return for the latest year, 2025. But usually, no, that is not the case. Okay, good question. Okay, going back again, following the documentation, we talked about the balance sheet and the income statement need to be completed and need to be provided as part of your interim statements and your P&L. Cash flow statement usually used for larger loans over $1 million. Accounts receivables, again, we have a lot of government contractors in the DC area, and your receivables, whether if you're not a government contractor, you still have receivables for commercial clients. Those receivables you need to keep an aging schedule, 0 to 30 days, 30 to 60 days, 60 to 90 days, and further out. And those accounts receivable aging schedule need to be submitted. A lot of institutions, including ourselves, will lend based on the accounts receivables that you have. You provide proof of contracts to verify that, and we will lend a certain percentage on those receivables as part of the overall underwriting. Let me be clear, not just on the receivables. It is part of the over. You still have to go through the full underwriting process, but your collateral can be the receivables if you do pass the underwriting process and qualify for a certain amount of the loan. Payables, accounts payable schedule. We have, for your vendors, we ask for that. And if you have contracts, we'll ask for what's called a WIP report, a work in process reports of your contracts, pipeline report of contracts. Again, many government contractors, this is normal. They keep this as part of their process, and they use SAY software, but not unusual. Whether you're government or commercial, we'll ask for those contracts and a contract pipeline status report. I hope that answers the questions on the documentation. Okay. All right, moving forward. Okay, continuing with the internal analysis that we do, we're looking at how profitable is your business. You give us returns for the last 3 years. Have you been profitable, net profit each year? Have you had a loss one of those years? Why did you have the loss that year? We need explanation as to why that happened. If we look at your numbers, at your sales numbers, your revenue for the business, did your sales go up? Did your sales go down? How are they trending? If they went down significantly from one year to another, what caused that to happen? We look at the numbers, we dig, and this is where all the underwriting questions come in. We start digging into the numbers to see what is the retainer and how much money are you keeping in the business to grow the business for an existing business. What is your plan in your business plan as you project forward? If you projected $1 million in revenue the first year, 2 million the next year, 3 million, why is that going to happen? How are you going to acquire additional clientele that's going to lead to that revenue increase? So those are all the the things that we look at. And underwriting looks at when they're reviewing the numbers, and that's why you turn in all those financials, your P&L, your interims, your personal tax returns, your business tax returns, because part of the underwriting process is to look at all those numbers, and you'll have several questions that will be asked as you go through the process. Leverage is how much debt. Do you already have too much debt, and really you can't really afford to take on any more debt? So sometimes we kind of have to stop people from themselves and tell them you're putting your company in danger by trying to apply for this, and this doesn't make sense. Cash flow, again, historic cash flow if you're an existing business, projections of cash flow if you're a new business or a startup, at least 3 years. If you're an existing business and you're acquiring or opening up another location, we want projections to include. We will ask for projections to include that new location. How are you incorporating that into the business that you currently have? So that goes into play. And again, we're looking at the market environment. How are interest rates now? Are rates going higher? Are rates going lower? Is your industry deteriorating? Is it improving? We do what's called a sensitivity analysis with different rate scenarios to see how that could potentially impact your loan. And we look at all that and we share that with the borrower in this process. Okay. Collateral, we talked about. I talked about receivables being used as collateral as part of the overall underwriting process, usually used for when you have contracts and we get the accounts receivable aging schedule. Fixed assets is usually real estate. It can be primary residence. It could be a commercial building. It could be investment property. We provide that, we'll use that as collateral. Other generally inventory, but inventory is kind of dicey as to how valuable it is. So usually it's real estate and equipment. Real estate being by far the one that most people pledge as collateral. Personal guarantee, you have to personally guarantee the loan. As I said in the past, for most people, you would not get a non-recourse loan, which means no personal guarantee from both banks. Very rarely done, and you have to have an extremely good relationship, high value relationship with an institution to get that done. 99.9% of people are going to do a personal guarantee when you go out and apply for a loan with a bank. Okay, I think, and that kind of is pretty much the process. Obviously, you want to submit the documents all together as much as possible. We provide you a checklist on the front end. Um, on the front end, to so you're aware of everything that the bank is going to need, so you can gather as many documents as you can to provide that and submit that to the bank, so we can start our review process. There's a lot of communication with you, the borrower, uh, with myself. The underwriters will have several questions for you as we go through the process. But all in all, it's something that is very doable. We've done several loans in the DMV market. We've done several franchise deals, business startup financing. We've done multifamily real estate purchases for apartment buildings and so forth. So there's a lot, that's out there. Capital is out there, but the main thing is you got to have your documentation. You got to be ready when you apply for the loan, and be buttoned up in your process. Whether if it's a startup, your business plan, and if it's not a startup, then your financials need to be buttoned up. Your credit, you want to make sure that it's solid. Again, doesn't need to be over 700, but you want to make sure that you're working on your credit. You don't want to come to the bank if you just declare bankruptcy. It's not going to happen in that case. But if it's been a few years since you've had bankruptcy, then that can be considered. Some banks are more flexible than others, I will say, but that can be considered. So keep that in mind. So I'm here to help with your lending process. There's my contact information there that you're welcome to write down. And I'll open it up for any additional questions. I see one question again from Mr. Wiggins. Does your bank provide or recommend secure loans? We do provide secure loans. If you're not able to qualify in the normal standard way, we do provide secure lending available to you, both in the loan and in the form of a credit card, business credit card. You still have to go through the underwriting process, though. It's not automatic that because it's cash secured, it will be approved. Next question, if any.
Okay, no more questions.
Okay. Okay, that's fine. A lot of questions were asked along the way, which is great. I appreciated that, and I'm glad to give the response and share that with the audience.
Yeah, it was this. Listen, this was a great webinar. And for those people who are, who have businesses and they're starting to try and grow them and move them forward, this was great information to help them get there. A lot of people don't know the process to, get that commercial credit they're looking for to take their business to that next step. And so this was that information that they need to get them there.
Yeah.
So
If
this.
you have my contact information is there. Anything else that you come up with, even if you're not going to our institution, another institution, but you have a question, shoot me an email. I'm happy to try to answer the question as best I can.
We actually have another question that just popped
Okay.
up in here.
Let me see.
Should I already have a relationship with the bank before I apply, or is it okay to just apply when I need the money?
No, you do not need to have a relationship with the bank to apply. It does help in certain cases to have that relationship, but it's not necessary. We get plenty of people who come to us. Now, we will ask you to establish that relationship with us if you do apply with us for the loan, but you do not have to have a relationship initially.
Okay. And Mr. Wiggins wants to let you know he really enjoyed your webinar. Thank you so much.
Thank you, Mr. Wiggins. Enjoyed the questions.
All right.
Good
With
luck with
that,
your business.
so with that, and if there's no more questions, if you do have any more questions, I'm just going to wrap things up really quickly because this information is really good, and the Virginia Minority Chambers will continue to provide more and more webinars such as this because we want to make sure that we give our businesses the information that they need to continue to grow their businesses and prepare them for success. I see we have another question before I close it out. I
Sure.
want to make sure you get there. Tawana Broadway says, thank you so much. I am a business credit consultant and I'm always looking for new or updated information to share with my clients.
Absolutely. Thank you, Tawana, for that, for sharing that. And hopefully we can be of help to any client out there that needs to borrow, for business finance. And we're glad to help with that and assist with that.
Yes, thank you so much. So now that you all are given praises, I just want to let you know that there's going to be an end of webinar survey. So when you log off the webinar, there's going to be survey, and we'd love to hear any feedback that you might have on today's presentation about this presentation or what you might want to see in future presentations. We're going to continue to bring you good and relevant information. So please fill out the end of uh, uh, presentation survey. We also have another presentation, Capital Readiness Resource webinar coming up in March. It's going to be with the SBA. So please look on Eventbrite and you're going to see lots of marketing for that one as well. Sign up because we want to make sure that you are able to have every resource available to grow your business. This presentation is recorded. It'll be available on our YouTube channel, and we'll also send you emails thanking you for attending today. So thank you for being here with us. If you have additional questions that you want to send us later, feel free to send them to us as well. You can get it. I'll make sure that you get a copy. Someone asked, will you get a copy of this webinar? If we have it ready, I'll send it in our thank you email. If not, you can also follow Virginia Minority Chambers on our YouTube, and you can see all of our webinars that we've done thus far there as well. So thank you so very much for those questions, and we'll make sure that we follow up. Just follow us on YouTube and our social media, and you will make sure that you receive a copy of this great information and all the resources that we provide. So with that
Great.
said,
Thank you for having us, Tanya.
thank you, Rob. And I'll give you any last words if you want to say anything else.
No, I just want to say thank you for the attendees that are still here. I just want to let you know capital is out there as long as you follow some of the things we shared in this webinar. It's available to you. Businesses, one of the great things about doing this is that in my job, when I lend capital to an individual, I know it could potentially change the trajectory if that business is successful, really of their life. If you think about it, that business becomes very successful. So we're out here as a minority institution, Black-owned institution for over 90 years. We want to help the community. So please don't hesitate to reach out. Whether it's you or you have friends or associates that are looking for capital, business capital, we're glad to try to be of assistance. So thank you for attending.
Thank you, Rob. And I'll also include Rob's direct contact information in our follow-up email so that you don't have to go through Virginia Minority Chambers to get to them, so that you can have them as well. Thank you all for joining us today, and you have a wonderful rest of the week, and take care.
Thank you. Thank you,
Bye-bye.
everyone. Bye-bye.